You're listening to the Financial Source Podcast, your daily dose of sentiment updates in the European and U.S. sessions and critical risk event previews so you stay up to date with what's moving the market right now. Each session is carefully crafted personally by the Financial Source analysts and voiced by our AI hosts who, as it turns out, sound a lot better than we do. Here's Rachel and Michael with this session's deep dive.
Okay, let's unpack this. Imagine waking up to these reports. Russian drones repeatedly violating Polish airspace during strikes on Ukraine, forcing airport shutdowns, scrambling fighter jets. I mean, it's unprecedented, really. An act of aggression. And it just sends shivers across NATO's eastern flank, doesn't it?
It really does.
So today, we're taking a deep dive into what feels less like a standard global briefing and honestly more like a geopolitical thriller.
Right.
With these ripple effects touching everything from, currency markets to commodity prices. Our mission here is to try and make sense of these complex, interconnected events for you.
And what's truly critical here, I think, is understanding how these incidents, they seem disparate, right? A drone over Poland, a strike in Qatar, a trade proposal from the U.S., they're not isolated. They're all threads, integral threads in this larger, constantly shifting tapestry of global power dynamics. So this deep dive, it's really designed to give you the clarity needed to understand not just what's happening, but the why behind the headlines.
The why, exactly.
Showing how events in one place can cascade globally almost instantly. It's kind of your shortcut to being genuinely well-informed.
Okay, so buckle up then, because we're not just skimming the surface today. We're going from the borders of Ukraine, where these lines are clearly blurring, to the heart of the Middle East, that intricate diplomatic chess match. Then into the complex world of global tariffs, trade as a strategic weapon.
A big one.
And finally, what does it all mean? For your dollar, your euro, even the price of oil. This isn't just a recap. It's an exploration of the forces shaping our world right now and, crucially, how they impact you directly.
Let's do it.
Right. Let's start with that headline out of Eastern Europe. It's jarring, and it's a big one. Poland, a frontline NATO member, announcing its airspace was repeatedly violated by Russian drones during these ongoing strikes on Ukraine. And we're not talking about one accidental stray drone here. Polish forces actually had to shoot down several of them. It's calling it unprecedented, a clear act of aggression. For us, trying to grasp the gravity, what makes this more than just another border incident?
Well, look, this is a significant escalation. It's far beyond some minor incident. This really marks one of the most serious direct cross-border incursions into NATO territory since the war began.
Wow.
I mean, Warsaw had to shut down 2 major airports as a precaution. The audacity, like you said, it's striking. What's crucial here is that even if Russia claims these were unintended, maybe drones malfunctioning, blown off course, whatever, the sheer frequency and the fact Poland had to use its air defenses to shoot them down, it means this isn't just some isolated navigation error.
Right.
It signals a really dangerous blurring of the lines of conflict right there on NATO's doorstep. And this type of incident, it immediately elevates security concerns across that whole eastern flank. And importantly, it renews that intense debate around the threshold for Article 5, NATO's collective defense clause.
The big one.
Exactly. While it's not a direct attack, these events continually test the alliance's resolve, its response protocols. It's a stark, almost daily reminder of how volatile this conflict is, how easily it can spill over, puts the whole region on edge.
And Kyiv was hit again too, right?
Yeah, we saw Ukraine's capital, Kyiv, endure fresh drone attacks overnight too. It just underscores the relentless nature of this aerial warfare and the pervasive threat.
Okay, that clarifies the immediate impact, the broader concerns. It's a very real-time test for NATO, as you say. But while Europe grapples with that, the Middle East, well, it continues to be this volatile geopolitical fault line,
Always.
constantly reminding us how quickly things can shift. We're now seeing confirmed reports, multiple sources, that Israel struck Hamas officials in Qatar, a move Doha has unequivocally condemned. Violation of sovereignty. Hamas, for their part, said Israel tried to assassinate its delegation, killed several members, though senior leaders apparently survived. What's the deeper diplomatic weight of this action?
Oh, the diplomatic weight here is immense.
Ooh.
Potentially. far-reaching. Look, Qatar called the strike treachery. In diplomatic language, that's way beyond just condemnation. It suggests a profound breach of trust, especially given Qatar's really critical role as a neutral mediator, right? In hostage negotiations, broader peace efforts between Israel and Hamas. So this strike, it doesn't just jeopardize those fragile diplomatic channels. It could also impact Qatar's willingness or maybe even their ability to keep facilitating those discussions.
Which would be a huge setback.
The significant setback for any de-escalation efforts. And look at the immediate fallout. Algeria has already requested an emergency UN Security Council meeting. That signals the international concern. So this incident, it just demonstrates the continued, almost explosive volatility in the Middle East and that incredibly complex web of alliances and, well, antagonisms that exist, shows how easily one targeted operation can unravel months of delicate diplomatic work.
So a potential blow to future mediation efforts could have ripples across the whole region. But amidst all this high-stakes tension, we also saw something that seems contradictory. The International Atomic Energy Agency, the IAEA, announced progress with Iran on resuming inspections. They called it an important step.
Right.
Yet, almost immediately, Tehran issues a warning. We'll consider our commitments void if hostile actions are taken against us. How do we square these two things? Diplomatic progress, sharp warning, all in this context of heightened regional instability.
Yeah, it's a really important question about the delicate dance of international diplomacy, especially with a player like Iran. The IAEA's announcement of progress, however small it might be, suggests a crack in the door, maybe, for dialogue. Potentially an attempt by Iran to signal some willingness for engagement on the nuclear front. And normally you'd see that as a positive development, right? A glimmer of hope amidst the current regional chaos.
Sure.
However, Iran's swift warning about hostile actions, you absolutely cannot ignore that. It's a clear signal that any perceived aggression, whether it's related to the strike in Qatar or other ongoing tensions, could just immediately derail any nascent diplomatic progress.
So very conditional.
Highly conditional. It serves as a reminder that their commitments are very sensitive to external pressures. The critical takeaway here is that even when you see signs of movement, the balance is incredibly delicate. The potential for escalation remains ever present. So these two narratives, they don't really contradict each other.
Okay.
They actually highlight the incredibly complex, almost two steps forward, one step back nature of international relations in this region.
It's truly intricate. Every move, every statement seems to have multiple interpretations, potential consequences, keeps everyone on edge. And these geopolitical flashpoints, they send immediate ripples. But just as military lines are drawn, so are economic battle lines, aren't they?
Increasingly so.
Trade is becoming this strategic weapon, and we're seeing these ambitious proposals from former President Trump. He's reportedly asked the EU to impose 100% tariffs on goods from China and India.
Yeah, that's right.
The stated goal: pressure Putin to end the war in Ukraine. And, the Financial Times reports, Washington is prepared to mirror any EU tariffs. A 100% tariff. That's an enormous lever, almost unprecedented scale for such broad application.
It is. It's an aggressive, certainly ambitious use of trade policy designed to achieve very specific strategic political objectives. The idea basically is to create this unified economic front, particularly from the West. That makes it economically untenable for countries like China and India to indirectly support Russia, or for Russia to sustain its war effort. When we talk 100% tariffs, you're essentially doubling the cost of imported goods.
Making them prohibitively expensive.
Exactly. This isn't just minor trade adjustments. It's about fundamentally disrupting supply chains, economic relationships. What's really noteworthy is including both China and India, two massive, globally integrated economies. This would create significant economic headwinds, not just for them, but for global consumers, too, potentially driving up prices, contributing to inflation right here in Western markets. That's a key consideration.
And domestically.
Well, the U.S. Supreme Court has even agreed to fast-track the administration's appeal over rulings that invalidated many of Trump's previous tariffs. The Treasury Secretary expressed confidence they'll be upheld. So that signals this continued domestic political push for these economic tools as, legitimate foreign policy instruments.
It certainly sounds powerful. The scale is striking. But realistically, what are the chances the EU would actually agree to such sweeping tariffs, given their own economic ties to China and India? And what about unintended consequences? Global supply chains? Our own inflation?
That's the billion-dollar question, isn't it? The EU would face immense pressure from its own industries, from consumers. Europe has deep economic ties with both China and India.
Very deep.
And such tariffs would almost certainly result in retaliatory measures. That would significantly impact European exports investment. It could lead to widespread supply chain disruptions, making goods more expensive, harder to get.
Fueling inflation.
Fueling inflation, exactly, at a time when many economies are already grappling with cost of living crises. Historically, look, while tariffs can exert pressure, 100% tariffs applied so broadly, they have a high risk of backfiring, damaging domestic economies as much as, or maybe even more than, the targeted nations.
So a big gamble.
A huge gamble. So, while the proposal signals strong intent to use economic leverage against Russia, the practical implementation, the potential for severe blowback for the EU, it would likely make them very, very hesitant to fully commit.
That provides a much clearer picture of the complexities. But at the same time, it's not all confrontation, is it, even from the same administration?
Yeah.
Trump also confirmed trade talks with India are ongoing, expressed confidence in reaching a successful agreement soon.
Right.
And Prime Minister Modi echoed that, describing the negotiations as a pathway to unlocking the limitless potential of the U.S.-India partnership.
Yeah.
So this dual approach, aggressive pressure, but also strategic partnership.
Precisely. And this highlights the nuanced, often contradictory nature of international relations. While there's this push for aggressive tariffs for a geopolitical goal, there's also a parallel effort to strengthen strategic economic partnerships. The positive outlook from both the U.S. and India on their trade talks, it suggests a recognition of mutual benefit, strategic alignment, especially given India's growing economic clout, its critical role in the Indo-Pacific.
Counterweight to China.
Seen as a key counterweight to China, exactly. So strengthening economic ties serves both nations' long-term strategic interests. So you have this really interesting dynamic. Trade being used simultaneously as both a weapon and a bridge. Yeah. In different contexts, depending on the strategic objectives, it's a delicate balancing act, really, designed to maximize influence and secure alliances in this multipolar world we're in.
It really paints a vivid picture, a world where everything feels incredibly interconnected, and these strategies, geopolitical, trade, can just shift on a dime. So let's zoom in. What does all this mean for financial markets? The stuff that hits closer to home for people listening, investments, purchasing power. Let's start with currencies. The euro, for instance, came under notable pressure this morning, slipped back below 1.1C.
Yeah, that euro dip was directly weighed down by those geopolitical risks we were just talking about, particularly tied to Poland's airspace breach, the broader European security jitters.
Makes sense.
When there's perceived escalation or instability in Europe, investors tend to get more risk-averse. They pull capital from euro assets. This specific incident prompted a bit of a flight to safety, weakening the euro against other major currencies.
Okay.
The critical takeaway here, for you listening, is how quickly and directly political instability translates into tangible currency market moves. Affects everything from import costs to the value of international investment.
And the dollar.
Meanwhile, the dollar index steadied overnight. Traders kind of shifted focus to today's U.S. producer price data and tomorrow's CPI release. Now, for you, the Producer Price Index, or PPI, that measures inflation at the wholesale level, what producers are paying. The Consumer Price Index, CPI, measures inflation from your perspective, the consumer's perspective. Both are crucial indicators for the Fed's interest rate decisions. Stronger than expected inflation data could signal a more hawkish stance, which usually strengthens the dollar.
So global events matter, but domestic data too.
Absolutely. Domestic data plays a huge role in market direction. We also saw the yen hold firm following reports the Bank of Japan still sees scope to raise rates this year, despite some political turbulence in Tokyo. Sterling hovered near 1.36, markets waiting for UK data. And the Aussie and Kiwi dollars got a bit of support from a firmer Chinese central bank rate.
The PBOC rate?
Yeah, the PBOC daily reference rate often signals Beijing's outlook, influences regional currencies, but they were capped by weaker Chinese inflation figures. So a mixed bag there.
Okay, so geopolitical jitters hitting the euro, economic data, central bank policy driving others, China's health influencing the Aussie and Kiwi. What about commodities, the basics? Crude oil prices rose, didn't they?
Yes, they did. Crude oil prices rose, which frankly isn't surprising given the intensifying geopolitical tensions we've been discussing.
Right.
Those reports confirming Israel struck Hamas officials in Qatar, coupled with the Poland drone incident, even the talk around Trump's tariff push against China and India, It all added fuel to market jitters.
Mm-hmm.
Oil markets are highly sensitive to anything suggesting potential supply disruptions, whether that's direct conflict in oil-rich regions or broader instability impacting shipping or production.
But didn't inventory data show a build?
That's what's fascinating.
Mm-hmm.
U.S. private inventory data actually showed a surprise build in crude stocks. Normally, that would push prices down more supply, right?
Yeah.
But the overarching geopolitical backdrop kept prices supported. It shows the market is prioritizing these perceived supply risks. This global instability over the immediate supply figures reflects a deep-seated anxiety among traders, I think.
Hey, gold. Safe haven.
Gold recovered from yesterday's pullback. It continues to trade near record highs, further signaling that investor anxiety, that desire to hold assets seen as secure in uncertain times. Copper also edged higher, kind of in line with broader risk appetite, which can be a bit of a mixed signal. Maybe some optimism on growth, maybe just speculative buying at a volatile market.
Okay, let's circle back then, try to wrap up what we've unpacked today.
Right.
From those really alarming drone violations over Poland, sent a significant jolt through Europe, raised critical NATO questions, to the intricate, delicate diplomatic chess in the Middle East, the Israeli strike in Qatar, Iran's cautious, conditional progress with the IAEA.
Very conditional.
And then turning to those ambitious global tariff proposals from former President Trump, aiming to use economic pressure on the Ukraine war. It's abundantly clear, isn't it? The world is in constant dynamic motion. These events are far from isolated.
Absolutely. And, knowledge is most valuable when it's understood and applied. What we've seen today is really a powerful snapshot of how deeply intertwined geopolitics, trade, and financial markets truly are.
Totally connected.
Every headline, every diplomatic move, every economic proposal has a ripple effect, touches every corner of the globe. Knowing this allows you, the listener, to anticipate and understand not just the what, but the why behind these critical shifts, gives you a valuable edge in making sense of it all. Which raises an important question maybe for you to consider. As we watch for key inflation data like the U.S. producer price and CPI releases, stuff that could influence interest rates, and monitor these major global political shifts, how might these escalating tensions, for instance, the deepening strategic ties we see between North Korea and China, or the ongoing volatility in the Middle East, how might these start to exert even greater, maybe unexpected, pressure on the global economy and on the everyday markets you interact with in the coming months? Will we see sustained commodity price spikes, or will central banks find new ways to navigate this increasingly complex landscape? Something to think about.
Definitely something to think about. Thank you for joining us on this deep dive into the global briefing. We really hope this has given you some clarity, some insight to navigate these complex, interconnected events shaping our world. Keep exploring, keep questioning, and we'll be here next time to help you make sense of it all.
Thanks for listening to the Financial Source podcast. If this podcast helped you at all today, would you consider leaving us a review to help spread the word? Each month, we also give away different resources and indicators just to podcast listeners. So write into Financial Source at support@financialsource.co to claim your free gift today. Talk to you all in the next episode.